Hey guys, good afternoon. Chris from Husky Trading Solutions. A little bit after midweek here, Thursday. I wanted to get in and film a video yesterday, but got tied up with some other stuff. But today was a pretty decent day. So before we start, we have a risk disclosure. Just everybody flip through that for a couple seconds. All right, very good. All right, there were a few opportunities today. One of the better ones that I took for the room was in NASDAQ. So we'll start out with a NASDAQ 30-minute market profile chart. And here we can see our range. Over the past couple days, we have been trading around or have made new contract lows from the start of a previous session. If any of you guys were watching, we went all the way up from contract lows to contract highs. Probably one of the largest moves that we've seen in quite some time. Downward moves, I should specify. So here's a daily chart. This is what we can see that we've done. If you guys are familiar with candles, this is where we opened up. And here's where we closed. Now, this is a continuous daily chart, but as far as when the June contract actually started trading, that's going to be around here. So we've kind of really made a healthy move down, okay? Kind of turned the whole trend of this contract, again, specifically this contract, June 17 contract, from a up to downward trend. How we're going to relate with some of these other areas, time will tell, but using this, it was enabled us to pull off a pretty nice trade here. So there were some opportunities from the bottom, especially in some of the other markets. Dow for one of them. I did catch a nice Dow from the lows on my live account. I did not do that for the room because we were busy with other stuff, but this is one that we did take for the room. So every student in here did have the opportunity to act upon it if they wished. But anyways, okay. So what I want to focus on is around the, get my drawing tools here, high of yesterday and the high of today, and what made that fairly unique. All right, we have a buildup of volume. These are volume distribution acceptance areas, as I like to say, in through here, we opened up, drove, got through our initial balance. These are all some terms that if you ever decide to visit my room, can get you up to speed. Okay, but made a nice move up and kind of topped out right about here. Okay, right about around yesterday's high, and this this little volume ledge that we have here. Okay, so that was the first sign that something may be happening. All right, after we got up there, what I did was go over to my 30-minute chart. Let me delete some of these lines here, and kind of get an idea of what we've done over the last few sessions. So who is in control here? All right, well, we can clearly see in this chart from this big day, red bar, red bar, red bar, red bar, all the way down, okay, and then we've kind of stopped, okay? We flattened out. Yesterday we rallied. Globex traded sideways, and what this gave us were a couple points of interest for targets, such as this. Okay, couldn't really take out that top area. That made me think, where does this line up with this big down sweep over here? Well, we can see a little bit of basing or inflection of price. Okay, these solid red bars went from solid red to all of a sudden a green bar. Okay, what's going on? So in that particular moment in time, buyers tried to regain control, stop the selling, could be profit taking, not really sure, but what we're given is a little bit of a basing area here. Okay, this bar closed green. This bar opened up, tried to go green. Okay, then inevitably the buyers lost and downward trend continued. So this is something that's going to be pretty important to us. So what I like to do is go in here, label this as a demand zone, and again, if you're not familiar with these terms, come and check my room out. This is all stuff that we're going over and learning on a daily basis. Okay, what I'm going to do is I'm going to draw in an area right in here. Okay, this is your 30-minute wick, and again, this is based off of an area which to me was significant. Okay, we can see that price here is stopping, and go figure, look at exactly where we stopped again today. All right, so this really brought out a good spot where, you know, we're looking for either potential targets for anybody who was long, or the way that we used it were potential entry zones for our shorts. All right, so that's enough of that. Close out here. Now let's actually go to our tick chart to see how this thing's set up. All right, so highlighted in red, we have our area. Now, what we like to do in most cases is look for some type of a relationship here where we can see some type of pattern that's developing to show some weakness up here. Okay, we have a first time hit, came up, couldn't get above that area. Okay, anybody looking to short this here, you have entries, but you know that your risk, okay, your risk is always, for any trade that anybody takes, risk needs to be defined. Risk is going to be above this zone that we have marked off here in red. All right, well, didn't take it here. Okay, now we have a sign of weakness. Come down, retest. We have a few moving averages that we use. We want to see this market get below them so we can catch it from underneath, and we're still using this as resistance. So again, these highs, and really more specifically, this is a double top formation, something that we like to call an M formation. You can even tighten up your risk once this high is made. We don't want to see it trade anywhere above that high. In other words, we don't want to see it getting taken out, because then the uptrend can continue. The long term is down, but we are looking for shorts in this market and trying to find stuff as you know, as good a spot to sell it as we can. So in this case, this was it. All right, so once we got below our moving averages, we have a 50 period, we have a Hull moving average, we have underlying here some 200 moving averages, so we can kind of get an idea of where we're going, or where this is going. Market came in, gave us an entry, traded through a little bit, came back up. Again, this is not exactly what we want to see. This is a triple test, but our stop was still intact, never got hit, and then what happens? The market starts to crater. Okay, so what I'm going to use for profit management, or targets, is I always like to have something set right around this 200. Okay, when we get below the 50, we have a very good shot of traveling down to the 200 simple moving average. So taking one off. Again, this was a 2-lot trade, so not a lot of risk in that as well. And now we're just following the market, following the market. Okay, what I'm doing is looking at these areas as also potential places to cover, but I have one left, so I really want to maximize this and see what I can get out of it. So not trying to really panic out of this trade. I want to give it a little room. Now we have another test of these highs. Still can't make it. Very good sign for what we're seeing. If we can't even get up back into that basin area, this area underneath is now going to act as further resistance. So worked out rather well for us. Okay, now we're starting to get close to the close, and boom. Okay, followed these stops down as far as I could, but inevitably we got taken out, and the profit was pretty decent for a 2-contract trade. All right, again, this is just one of the things that we've done today and gone over. Anytime you'd like to pop in and see what we're doing, please feel free to visit us. You can reach me at 888-519-9251, extension 101. Again, that's 888-519-9251, extension 101. Thank you very much, guys.